welcome to everyone watching our FT Live Insurance Innovation Conference. I'm the FT's tech correspondent here in San Francisco, covering cybersecurity, privacy, and social media. And I'm particularly excited for this session today on how cyber is changing the nature of risk, as we have two fantastic speakers. Firstly, Michael Rogers, who between 2014 and 2018 served as the director of the NSA, commander of the US Cyber Command, and chief of the Central Security Service. And after 37 years in the military, he's now joined CyberCube, the cyber insurance analytics platform. Mike is going to be the first to speak for about 15 minutes or so, sharing his thoughts on how the pandemic has altered the rapidly evolving cyber threat landscape and what this means for risk and insurers. Then Mike and I will be joined by Pascal Millaire, the chief executive of CyberCube. Pascal established CyberCube while he was vice president of cyber insurance at Symantec, before spinning it out as its own standalone venture in 2018. So during the group discussion, we welcome any audience questions. Feel free to send those in. You should have a chat box next to your video player down the side for submitting those. One final bit of housekeeping is that you're also welcome to share all your thoughts and tweets on social media using the hashtag FTII. And you can also head over to the event community to chat to other delegates and continue the conversation after the event. And now Pascal and I will leave you all with Mike to kick things off. Over to you, Mike.
Thank you very much, Hannah. Excuse me, and good morning, good afternoon, good evening to all of you, wherever you are in the world. I'm speaking to you from the East Coast of the United States in the mid-Atlantic state of Pennsylvania, where it's a beautiful day. What we're going to focus on is really about cyber and the nature of risk, and what are the implications for insurance. I would argue in some ways, cyber represents one of the essential challenges for insurance in the 21st century. What do I mean by that? To me, insurance, look, it's all about probability. You're trying to quantify and monetize risk. That is the essence of insurance, trying to quantify, understand, and then monetize that risk in a price point that is both acceptable to a customer as well as the underwriter. And you find yourself historically based on the physical world. Much of that risk over time has been focused on the physical side of life. Damage as a result of physical damage, and that damage largely caused by physical activity. Hurricane, fire, accident, hurricane, as I said, so largely physical events. And yet, to me, one of the biggest challenges for insurance in the 21st century is increasingly, for some organizations, the greatest value to them is not in the physical world. It's much more in the intellectual property and in the business continuity world. And how do you quantify the value of intellectual property? How do you quantify the value of interruption when it's not based on a historic physical model? You don't have a century plus of data, and the nature or value of that intellectual property is changing over time. And what is of high value to you now might not have the same value to a client 2 years from now, 3 years from now. Cyber, in some ways, is the very embodiment of that challenge. It's a man-made activity. It evolves over time. It's seldom, if ever, constant. And there's no long-term historic record, if you will, to draw upon, to draw analytic or empirical conclusions. And that's really what, Pascal and the team at CyberCube, for example, are focusing on, trying to help insurance professionals develop models to actually try to quantify this. Because in the end, what you're trying to do is understand what's the frequency, what's the likelihood, and what's the severity, if you will, of potential types of activity. And then you're trying to put, as I said, a monetary value to it. But if you look at cyber, I would argue it forces insurance to look through two interesting prisms. And this is also true in the physical world. But the first prism is, what happens when the entity you are insuring is the specific target and cyber is being used against it to achieve some kind of effect. It might be extraction of their intellectual property or their data. It might be locking down their data and having to pay ransomware to regain access to it. It might be on the part of an actor trying to stop an organization from being able to execute its business. That might be something physical. Hey, we produce cars. Just look at Honda. Honda just had an attack, hard to believe, almost 9 months ago now, where an external actor was able to penetrate their network structure and through the use of cyber, lock down their production line, thus forestalling their core business activity. An automotive company that couldn't produce cars. Pretty foundational to a business model, pretty foundational to a client or a company's ability to execute their operations, if you will. So the one scenario to me for cyber is something very targeted. But the other scenario that's interesting to me is what happens when you're not the target, but you still have massive damage. And I would argue that's what you saw in the last kind of global cyber event we experienced, NotPetya, June of 2017, over 3 years ago, where Russian actors, in this case the GRU, part of their military intelligence structure, decides they're going to use cyber as a tool to attempt to create problems within the Ukrainian infrastructure. And yet the technique they use to do this suddenly proliferates this on a global basis. And now companies that had nothing to do with the political situation in the Ukraine, which generated this activity and which in fact was the target, suddenly finds themselves shut down. Business, you got massive business interruption issues. I just think cyber is very interesting in that regard. You got to look at it through two prisms, and it fundamentally, I think, is at the heart of how is insurance going to position itself to deal with these non-physical and often changing events that don't have a real significant historic runtime or frame of reference that you can use to generate a kind of sense of probability. It's also important to see there's two trends, I would argue, that are going on out there that are going to make this worse, not better. The first is the one we're all living through right now, which is why we're actually doing this virtually, vice physically. And that is the impact of a global pandemic that is, for health reasons, driving people from physical concentrations, from presence among others, to this much more dispersed world in which we're all at home, whether that might be, a small apartment in the city, you're out in the country, you decided to go home with family, whatever. We're physically dispersed, and now we're all remotely accessing and executing our business functions through infrastructure that in fact is outside of that business structure. And that also includes outside of that traditional business structure's cyber security model. In addition, COVID is also blurring the lines and increasing the risk from cyber, because now increasingly, as we're working from home, we're all using the exact same infrastructure, the same hardware, the same software to not only do our business duties, if you will, but to deal with our personal lives. So the same infrastructure that we're using today to talk to each other virtually at an FT insurance summit is the same infrastructure for the majority of us that our children are going to do their gaming on, that our children are going to do their schooling on, that we're going to try to stay connected to our dispersed family members dealing with this global health and economic crisis that we're in. And so home security, home systems, just not really built to the same kind of cybersecurity standards as the business kind of constructs that we had put in place. The second trend, in addition to COVID, I would argue that is increasing risk right now, is the Internet of Things. We are headed into a world in which more and more of the world around us is connected virtually. And it doesn't matter if it's in our homes, our heating systems, many of the things that we use actually do day-to-day things, vacuum, iron, etc., have remote access now designed to allow us as consumers to be able to monitor. Hey, I want to know if I'm out and about and I'm curious, do I need more milk in my refrigerator? We have smart technology that enables your refrigerator now to monitor its contents and allow you to access those contents remotely so that you can decide, do I need to buy milk on the way home today? All of that access, all of that remote connectivity, it's great for increased productivity. It's great for increasing quality of life. It's great for helping us make life easier to be able to do more within a given amount of time. But you also have to acknowledge that it also represents increased access points, which makes an attacker's life much easier. And so, bottom line, the challenges that you're seeing in cyber right now, and the most visible manifestation of these challenges, I would argue, in the last 6 months, is probably the explosion in ransomware. You're just watching ransomware explode. Ransomware being an actor, normally a criminal entity, but it can be a nation state. An actor penetrates a network, whether it does that by directly identifying a vulnerability, a hole, a mispatch in a network, whether it most commonly decides it's going to get into the network by going after the users that access the network. And it predominantly does that through the technique of spear phishing, sending us as users links or images that lead us to open them, to click on them. And unknowns to us, we have now uploaded a series of malicious softwares, malwares into our systems that are now creating backdoor access for these actors that is now enabling them to move around our network and explore the network structure. It's enabling them to identify where is key data that an organization has, what's the key infrastructure. They understand it, they map it, and then quite frankly, they use a series of capabilities, for example, uploading encryption programs that lock down the valid user's ability to actually access. It can be their ability to access data, it can be their ability to access infrastructure. And so look at how business interruption is just exploding in the insurance industry. I would argue that's probably the number one within the cyber arena. That's probably the single biggest category at the moment, largely driven through this phenomena of ransomware. And I don't see that, sadly. I don't think that's really going to change anytime soon. I also think insurance has an important role to play here in cyber. One of the reasons I got involved with CyberCube, because when I left my previous life, where I was very focused on cybersecurity within the US government and our international partners, I always believed that insurance played an amazing role in potentially incentivizing behavior on the part of businesses and users, much like we saw insurance incentivize safety in automobiles. Hey, you buy a safer car, we will give you a lower property and casualty rate. Hey, if you buy a car that has specific safety features on it, we'll actually grade it by the feature and we'll give you a lower premium. I think that insurance, cybersecurity, cyber insurance has the potential to play a similar kind of role, to incentivize the choices from a cybersecurity perspective that businesses and individuals are making. And with that, I'm mindful of our time. The greatest value is going to be us interacting together. So Hannah, let me turn it back to you and Pascal. And I look forward to your questions and answers. Please feel free to use the chat function.
Thanks for that, Mike. And as Mike says, a reminder to those watching, you can submit questions now through the chat box you'll see at the side of your video player. But Mike, you sort of touched a bit on this changing landscape of threats we're seeing, this move to remote working, a rise in IoT means that sort of attack surface is greater. You also spoke about this explosion of ransomware, that becoming more and more sophisticated. I wondered if, Pascal, you could also talk a bit about what you see as the biggest changes in the threat landscape and explain how exactly they're providing opportunities for the insurance industry and what those opportunities are exactly.
Sure. So as Mike pointed out, business risk in the 21st century is shifting from physical risk to digital risk. And as far as the opportunities that presents to the P&C insurance industry, I would argue there may have been no greater opportunity to insurers in the last century. We only need to look back the last 7 or so years. Cyber has grown from barely being a top 20 risk on the minds of insurance buyers to typically the number one risk. And we're only just beginning. You look at Accenture, they're saying in the next 5 years, they expect cybercrime could cost companies in excess of $5 trillion. You look out 10 years to some of the trends that Mike was pointing out, with hundreds of billions of internet connected things, connecting much of the global economy to the internet. What we're seeing is a transformation of risk in the 21st century and transformational business opportunities for insurers to come in and create new financial products that share that risk, but also share mitigating best practices with enterprises and consumers.
And I don't suppose, Pascal, you could talk a bit about how competitive is that market? What sort of products we're seeing out there? How are these models developing?
Yeah, the market is competitive, and it's increasingly competitive, which I think is great news for buyers of cyber insurance. Look, the insurance industry has traditionally struggled to even keep pace with GDP growth, but cyber is an absolute exception to that. Munich Re has recently estimated they believe the cyber insurance market will triple in the next 5 years, and we're only just beginning. So what does that mean? That means a golden age of innovation in terms of new products covering new risks. But it's also great news for enterprises that are already buying cyber insurance. Penetration rates are too low with existing products, limits are too low, and risks are increasing. So all of that pulled together spells an unparalleled opportunity for insurers, but also an opportunity for enterprises to understand, well, what are those digital risks that most impact them, and how can they turn to insurance as part of a holistic risk mitigation and risk management strategy?
Yeah, I wondered if Mike, you might talk a bit about some of the challenges that this market faces, particularly the data challenges, right? How do you make sense of all this data out there, of the signals that really matter versus those that don't? What sort of approaches and strategies have you seen that are promising?
So first of all, I always urge organizations, look, not all data is the same. I think we need to have a much more nuanced approach to data. What really translates into value? And I define value as what helps you, whether it's in your business or whether as an insurance provider, what helps you gain knowledge, insight, and understanding. And that's not the same thing as just having a massive amount of data. So I would argue one of our challenges is going to be, how do we evaluate or assign value to different data elements? That starts to give us a means to prioritize all of this. Because quite frankly, boy, and I live this in the military and in the intelligence world, you can just get inundated with data, much of which doesn't really generate value for you because it doesn't help you understand or generate advantage for you. And in the end, that's what you're effectively trying to do. I also think it'll be interesting to watch the insurance industry harness the ability of machine learning and artificial intelligence as tools to help both generate data, but also create that knowledge and understanding as a result of significant data. I think that is going to be a really interesting journey.
And perhaps if I may build on Mike's point, years ago, insurers used to complain that the challenge with cyber insurance was the lack of data. But increasingly, what they're finding is there may never have been a line of insurance with more data available than cyber risk. The problem isn't, is there data? The problem is, how do they partner with analytics companies? How do they find data themselves and make it useful and relevant to an actuary and underwriter? And what they're increasingly finding is that's requiring bringing new people into this industry. Threat actor intelligence requires people that look a lot more like Mike than a traditional actuary. It requires outside-in scans of the public internet. It requires new data sources. It requires new technologies. But critically, it requires that data and technology to be delivered in a way that an enterprise insurance buyer can understand. And things like scenarios and dollars and cents in a way that an underwriter can understand and an actuary can understand. And I think that is as much a challenge as finding the data itself.
Yeah, if I could just reinforce, I think I always tell people, look, the greatest challenge in some ways here is not technology, it's culture. It's how do you change your culture as an organization to value, to do things in a very different potential way. That is the hardest challenge to me for organizations.
Yeah, and I think you sort of mentioned in your initial speech pricing, right? With developments so fast, one might ask, is this too nascent? Can we trust that cyber insurance is accurately priced so early in the day and that this underwriting process is fair? I don't know if you have any thoughts on that, Pascal or Mike.
Pascal probably does. My only comment would be, I think we have to acknowledge we're on a journey here. And just as you've seen a significant rate of change, you're only going to see more of that. So as insurance organizations, as underwriters and actuaries are trying to build their models about, so how are we going to quantify this? How are we going to use this data? I think one of the things we've all got to be open to is the idea that this is going to be a model that's going to evolve over time. So for organizations, you have to be open to the idea that you are going to be evolving your models. And it's not, okay, we pick something, this is it, we're pricing everything and we are locked in for the next 48 months. That is just not going to work.
I think that Mike's...
Sorry. I was going to add that it will be useful perhaps for viewers who are less familiar with cyber to maybe give a sense of, how far are we in the trajectory of this? How early days is it when we say early days? When you're thinking about that.
Pascal, you were going to say something then.
Sure. Yeah. Look, I mean, just to kind of tie both of those together, I think we are on a journey, but I think it's important to recognize the remarkable job that this industry has done on the journey to date. This is a market that has been growing consistently by 20 to 50% per annum for a decade. And it's been doing that while pricing risk with attritional loss ratios that are typically averaging in the mid-30s to low 40%. Now, that's remarkable for a new line of insurance to be growing so quickly and growing so profitably. Saying that, there are new challenges on the horizon as the insurance industry continues on that journey. The first challenge is the one that Mike pointed out on ransomware. The emergence of ransomware has led to increases of as much as 10 percentage points in the loss ratios of this business in the last 12 months, sometimes more. The second challenge is there's an increasing recognition that insurers need to understand black swan catastrophic events from cyber catastrophes. And the pricing challenge for those events often isn't in cyber insurance policies. It's in other lines of insurance outside of cyber risk. In fact, in June of 2020, the UK's Prudential Regulatory Authority released the results of their 2019 general insurance stress tests and found that cyber catastrophe events led to losses in the UK that were larger than flood, larger than UK windstorm, larger than Japan earthquake, and in fact, larger than almost all risks outside of US hurricane and California earthquake. So I think the industry's done a remarkable job actually pricing attritional losses to date. And going forward, it's that catastrophic risk, and critically, catastrophic risk that doesn't always sit in a cyber insurance policy, but sits in property and other lines of insurance. And I think the industry, partnering with companies like CyberCube, is doing a great job on that journey, addressing those two twin go-forward risks.
And to your question that, oh, I'm sorry, go ahead, Hannah, go ahead.
No, please go ahead.
I was going to say, you asked, so how do you see it unfolding? So I think there's a couple things. Number one, I hope at a nation state level, we can come to grips with this whole act of war, the wartime exclusion piece. Can we help businesses, help the insurance industry understand how valid is this construct in the world of cyber as they're trying to develop, coverage plans, so to speak. And at the moment, we've got some interesting legal cases ongoing as a result of NotPetya. So it'll be interesting to see how that plays out. And I hope we get to a place where, quite frankly, we can get to a better legal definition that actually helps the insurance industry deal with it. To Pascal's point, that the silent cyber piece is really going to be interesting over time. Do you focus on a cyber portfolio, realizing that, hey, well, much of your risk really is outside that, quote, cyber portfolio from cyber in many ways. I expect that cyber activity itself is likely to get worse before it gets better, because the trends that enable it, that power it, greater financial incentive. You look at ransomware, boy, it is all about money. It's become so active because it is both easier to do, and because, quite frankly, in the face of economic uncertainty and massive economic pressure, companies are more willing right now to pay. Their view is, look, the margins are so tight for us, we can't take any interruption. We can't take the reputational risk. We just need to make this go away, pay the ransom. So you're seeing an explosion in the percentage of companies that are paying ransom. It's one reason why, for example, you just had the US Department of Treasury put out a notice reminding everyone, for example, hey, look, many nations, many cyber criminal actors that are executing ransomware activities are actually formally sanctioned entities. Hey, remember, you cannot, at least in the United States, you cannot legally provide money or payment to sanctioned entities. So I just don't see the fundamentals changing anytime soon in terms of cyber actor activity. The next thing I look for in terms of where is it going to go, and then I'll shut up. To date, it's been data extraction with a little bit of data manipulation. What I wonder is, do we start to really see a lot of manipulation now becomes much more of a norm, where it's not just I stole the data or I locked it down and you're going to have to pay me. It's I'm going to actually make changes to the data, and I'm going to bet you're not going to recognize it right away. And I'm going to create harm for you in a way that you won't recognize immediately.
I'm just realizing we've only got a couple of minutes left, and I had a couple more questions. One thing we haven't spoken about at all is sort of the regulatory landscape. You've got sort of data privacy laws coming from Europe, CCPA here in California. Are they friend or foe to insurers? What direction are things headed? Are there opportunities there too?
Pascal, what do you think? And then I'll give you.
Yeah, friend. Regulation has historically been an accelerator for growth of cyber insurance market. When you have breach notification requirements, increasing the costs of a breach, increasing the liability from a breach, what we've seen initially with HIPAA for healthcare companies in the US, followed by US state breach notification laws, GDPR, and now CCPA, is regulation driving the cost of cyber to enterprises, and therefore growing demand for cyber insurance. Saying that, increasingly that demand is being decoupled from regulatory developments alone. Phase one of this marketplace was really about confidentiality, which is driven by regulation. Phase two, where we're at today, is more about business interruption and the availability of IT resources, as Mike was pointing out. He mentioned Honda, but there are shipping companies, pharmaceutical companies, professional services companies, retailers that have been hobbled by cyber attacks, hobbled even in systemic events. And it's that availability of IT resources, that business interruption, that is perhaps even greater risk beyond those that regulatory developments kind of forced to focus on in that phase one, which was predominantly around data breach.
Yeah, I think the positive side of regulation, it gives you predictability and it gives you a framework that you can build around and account for in the market. The challenge sometimes with regulation is you occasionally run into second and third order effects that you really didn't anticipate or understand when you created the regulatory regime. So one thing I say to regulators is we need a feedback loop in this so we can assess, is the regulatory regime we've put in place, is it having the actual impact that we had anticipated? Is it achieving the desired outcome, or is it having second and third order problems that we didn't recognize that are causing major drags to industry? I just think we need to build in a kind of feedback mechanism.